Welcome to ETF Edge, your go-to place for all things exchange-traded funds. I'm your host, Dominic Chu. Now, there is a massive move that we are seeing overall in the markets, and what we have been trying to develop here is a sense for just how much the markets are being imbalanced by some of the moves that we're seeing within the S&P 500 sector-wise. So for this, let's bring in Todd Sohn, a strategist over at Strategas, also Gavin Filmore, the Chief Revenue Officer over at Tidal Financial Group. Thank you guys both very much for being here with us. Maybe, Todd, we'll start with you first with regard to just how much we are seeing in this move in the ETF world because of some of the imbalances we're seeing within the marketplace, specifically the S&P 500.
Yeah, Dom, it's a great statement right there. Imbalance is the perfect word. You have the technology sector at an all-time high of about 35% weight within the index. Meanwhile, defensive sectors, staples, healthcare, energy, and utilities are at an all-time low at just 19%. And so while this has benefited passive investors in the ETF universe, you just want to be mindful that you're losing diversification using the S&P as a benchmark over the course of a day-to-day basis. I just want people to be aware of that going forward.
If they are aware of that right now, Todd, we all kind of know that there is a movement right now towards momentum, specifically within technology, communication services. That kind of situation is going to right itself in some ways by this broadening out trade happening. So when can we expect to see, if at all, that broadening out trade really try to balance out what's happening within technology and media overall?
Yeah, I wonder if it's actually occurring outside of the S&P 500. In the sense, what I'm talking about is small caps, right? The Russell 2000 IWM ETF just went almost 4 years without making a new all-time high. And since April, right, when the market bottomed out and had a good rally, along with the potency of rate cuts, we've really seen small caps pick up the pace. And so I wonder if you're seeing this broadening happen outside of the large cap space where investors are comfortable with their tech and AI exposure and then seeking other routes to perhaps surround that tech exposure, like small caps or even international too, where you're going to get more of a value tilt going within portfolios.
Gavin, you run and you help run a company that has a lot of I guess, offerings with regard to ETFs and just how much investors can use those different types of ETFs to counterbalance a portfolio. What exactly are you seeing from some of the funds that are on your platform with regard to where the development is happening? What types of funds are being brought to market that are in demand as maybe a ballast or some kind of a counterweight for what's happening within that broader tech trade?
Yeah, so Dom, I think what we're seeing, and we're involved in about 300 ETFs, right? So it's a lot of product of a wide variety. And if Todd's right, and his numbers back him up, which is that, there's more concentration in indices than ever, then I think investors are looking beyond just the, let's call it the VU and chill approach, where you just buy the index in an ETF, which is a great approach. But they're looking for diversification, and they're not finding it within the product or within the index. So they have to look beyond that, right? And what we see across our platform is a lot of interest in almost anything else, right? So obviously the gold trade right now is very topical, very interesting. We've seen a lot of inflows into gold-related income products, actually, that we're involved in. We're seeing a lot of tactical trading on the leverage side around single stocks. But probably more than anything, it's really the play for income that I think everybody has an interest in, especially the retirees of late.
And what type, Gavin, if you don't mind, what type of products do you see on your side of things over at Tidal with regard to addressing some of those income needs or those at least desires for things like defined outcomes or just, maybe the secular demographics in general about what's driving so much of that income orientation towards ETF investing?
Yeah, I think the majority of innovation has come out of the derivative space, right? And this is not new. This has been around for a few years now, but people keep trying to short it and basically say the income trade's over, right? I think there's been a prediction like that every year. And we just see that the market is suggesting something else, which is the appetite's very, very sticky. So products around income using derivatives is first and foremost. One thing that we do see that's interesting is, I would say, the historic lazier approach, which might be covered calls, are not always the go-to anymore, right? So now we're seeing more sophisticated strategies particularly using active management to diversify their approach to garnering income from these investments and not just capping the upside. So we see just a lot more innovation, a lot more nuance, and that's really driving flows. So Yield Max is a huge success on our platform, about 18 billion in ETFs, primarily around income-driven single stock products. But what's interesting is they're not just using the classic cover call. Instead, they're oftentimes selling call spreads. And that's been a very interesting approach because it unlocks more of the upside. So one of those like classic complaints around cover calls, you're starting to see managers using more advanced techniques.
All right, and Todd, one more question to you, and then we'll give kind of a similar one over here to Gavin as well. As you look out for the next 3 to 6 months, what exactly do you think is going to be that thing that dominates the ETF conversation in the coming months as we approach a seasonably strong time of the year and into a new calendar year in 2026?
Yeah, I think for ETFs, it's what's going on in the leverage space that has caught made a lot of eyes pop out in terms of trying to get 3x and 5x type products out the door. And what does it mean? Does it pose a risk to any of the financial markets? It's way too small of a corner, I think, to have that. And then secondly, I'd say more in market impact. Do any sort of the defensive sectors ever get to work again? We think healthcare is kind of interesting because there's been a ton of outflows from that space, and you can play growth and value within that sector. So I would say from the ETFs, the leverage space, and then in the actual markets and how you may want to position, take a look at healthcare. That's worth a shot in our book.
All right, and Gavin, to you, the final word here. What do you think is going to be that big trend to watch for in ETFs? What's going to dominate the conversation over the next couple of quarters?
I actually think it's going to be a return to thematic ETFs, right? I always viewed 2010 to 2020 as kind of the era of thematic ETFs, and then that slowed down post-COVID, kind of went to the derivative trade, which is obviously growing very rapidly, and I expect that to continue to grow. But I think AI has given thematic ETFs a shot in the arm and proven that ETF issuers can have a lot of success when they're bringing first to market themes, right? And we've seen that on our platform with several AI-related ETFs. And I think that's bringing eyeballs back to that space from the issuer perspective. So I would guess a lot of growth there, which has been a little out of favor over the last few years. So that's kind of exciting to see the seedlings on that front.